How secure do you think your finances are in this economic environment? You can secure your financial future, and I'm going to explain that in just a couple of minutes. You know, the last 20 years have been a real financial roller coaster for, you know, especially for the stock market and just in general. I know people who have lost 30 to 50% of their retirement savings back in 2008 and then again in 2011. And those were just the accounts that were invested in Wall Street's mutual funds. Mutual funds are supposed to provide a buffer in case one fund suffers a loss because several funds are grouped together. And then that way, the idea is that the average gains versus the losses will compensate and potential damage will be lessened and gains should be insured. But the problem with that logic is that all the funds are subject to the whims of the market and directly feel the impact of the economic instability and emotional sellouts or sell-offs of stocks due to the fears of people who are invested in them. The majority of 401ks and IRAs are comprised of these mutual funds. It didn't used to be this way. Up until about the mid-1980s, most companies offered pensions to their employees. And those pensions were not dependent on the Wall Street roller coaster. They were guaranteed and would provide retirement income for the life of the employee, and in many cases, their spouses. Now, very few employers provide pensions. They only offer the very vulnerable 401ks invested in the stock market. But there is an alternative that offers the same guarantees and benefits of those good old pensions of former days. So stay tuned. As I said, I'm going to talk about that in a minute. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. If you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. Listen, I don't want to harp on how ragged and volatile the economy is in general or how unpredictable the stock market is. No, you are fairly aware of those facts already, I'm sure. Still, it's rather frightening, especially if you're counting on your retirement accounts to provide you with a decent income when you do finally retire. And really, the fact is, the only guarantee that 401ks and IRAs that are invested in the stock market is all your money in those accounts are at risk of loss. So the question is, where can we put our money so that it will be safe and guaranteed to grow at a good rate and not be subject to a collapse of the stock market? Now, here's an interesting fact. Even if we take downturns and the possibility of total collapse out of the total collapse of the market out of the picture, the widely promoted idea that you can expect to gain 10 to 12% annually with investments in mutual funds, the factual statistics paint an entirely different picture. According to U.S. News Money Report, the average gains is only 6%. But that still isn't the whole picture because there are investment fees, plan administration fees, and individual service fees. Those fees take between 1% and 5% of your total account assets every year. Then, when you begin to take withdrawals from your account in retirement, you then will have to pay income tax on every penny of it. So if the average gain is 6% minus an average of 2.5% in fees, that leaves you about 3%, 3.5%. And then it gets taxed at least 25%. What does that leave you with? Not much. So what we want is something that is safe, totally independent of stock market volatility, that guarantees at least 3% gains without a bunch of fees eating into it, and that you can use it tax-free in retirement and actually any time prior to that if you want. So allow me to introduce to you the tax-free cash growth warehouse. Simply put, a tax-free cash growth warehouse is a participating whole life insurance account with a mutual company and that is designed for maximum cash value growth and availability. Currently, the accounts that I put my clients in are earning 6.1% annual compounding dividend interest. That's the best interest rate anywhere. And it's compounding and grows tax-free. You can also access it and put it to work for you without triggering a taxable event. And you can leverage it without slowing down the growth of your account. It's truly incredible. Not only that, but obviously these accounts come with life insurance, which you do not get with a 401k or IRA. And when designed properly, after about 6 years, the life insurance is basically a free bonus. Also, while there are limits to how much you can contribute to your account in a year, that limit is not the blanket limit imposed on 401ks and IRAs. It's based on your specific account. These accounts do not get eaten up by all kinds of management fees. And how much are you allowed to withdraw or required to withdraw annually is not dictated by the IRS. And you can access the money without triggering a tax liability. So let's look at an example real quick. If a 45-year-old male with a standard non-tobacco health rating and an annual income of $150,000 starts a tax-free cash growth warehouse account with $1 million life insurance benefit, typically you would want to put at least 10% of your income into a 401k or IRA every year. And we expect a 10% salary increase per year. So with the 10% guideline over 20 years average, amount contributed would be somewhere around $20,000 per year. So putting $20,000 per year into the tax-free cash growth warehouse account and an additional $10,000 to start with the dividend interest at 6.1% in 20 years, you would have about $568,000 cash sitting in your account, and the $1 million insurance will have grown to over 1.6 million. If at retirement your 401k had 568,000, you would only have about $390,000 after tax. With the tax-free cash growth warehouse account, you'd be able to leverage the entire 568,000 without paying any tax on it. And it would continue growing even if you stopped paying into the account going forward. In this video, I've only talked about using tax-free cash growth warehouse account as a replacement for a 401k or IRA. But there are many additional fantastic benefits that these accounts present. Tax-free cash growth warehouse strategies encompass infinite banking, cash flow, sweep strategies, and more. By putting these strategies into play, you can save all kinds of money on credit, interest, and fees, and lost opportunity costs, while your money continues to grow with high compounding interest, even while you leverage it to finance things. If you'd like to find out more or see how this super strategy could work for you, call, text, or email me, or schedule a call or Zoom meeting on my Calendly page. All my contact information and the Calendly link are in the description box below this video. If you found this to be helpful, please like this video and subscribe to this channel. And again, share it with your family and friends. Also, please post your questions and comments here. I will address them and answer them. You have questions, we have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. For now, aloha and mahalo for watching.